All right, let's take a look at United. Shares up just around 1.5%. The airliner announcing today that it will be adding to its transatlantic travel slate next summer. The news comes as United reports demand up 20% from 2019 during the peak portion of this summer. Joining us now for more on this and the state of the industry, we want to bring in Helane Becker, Cowen's senior research analyst. Helane, it's great to see you. So we had the news from United. The news yesterday was American lifting its third quarter guidance. It looks like demand is very strong amongst the airlines. What's your assessment?
Yeah, thanks for having me. So a couple of things. Number one, yes, you're right. Demand, especially for international, is very strong. We've seen a shift in mix in the last couple of months from domestic leisure to international, and mostly international leisure. And I think that's somewhat behind the United decision to add more leisure international destinations for next summer. We did a preview on Friday for the earnings season, and we said we thought American, Delta, United had the best opportunity for positive surprise because we've gone from the first, say, 4 months of the year when we saw international down something around 60%, 50 to 60% from 2019 levels, and now we're down closer to 15%. So you've seen that big increase as markets have opened up, people have shifted and started flying further, especially transatlantic, not so much trans-Pacific, but transatlantic. And business, we've gone from being down about 40 or 50% earlier in the year to being down 25% earlier in the year. So I think those two elements, and we've still seen strong domestic leisure, but instead of being up 35%, it's up closer to 10%, 15%. So you've seen that mix shift, which has huge positive implications for revenue. And I think the Delta reports tomorrow first. You just mentioned that, and I think you'll hear them talk about that for the rest of the quarter or the rest of the current quarter. Yeah, fourth quarter. Right.
And obviously the industry is still dealing with some of these staffing shortages as well. How is this affecting some of the more profitable routes for these airlines?
I'm sorry, I missed the first half. They're doing more of these what as well?
As we're still seeing some issues when it comes to things like labor shortages, as we continue to see some of these kinks getting worked out. How is this affecting some of the most profitable routes?
Yeah, so we're having these issues to your point, with respect to infrastructure. So it's not just labor, it's air traffic control, it's airport infrastructure. I don't know when you flew last, but I was at an airport yesterday. I was at 2 airports yesterday and the day before, and stores are closed. They haven't reopened. They can't find people. And we're seeing a lot of that. And so that's going to inform growth for 2023 and probably 2024. And not only that, you didn't specifically ask about this, but the OEMs are behind on deliveries. So the airlines don't have and they don't know when they're getting the aircraft. So from an airline perspective, it's really hard for network planning to think about where they're going to grow and where these aircraft are going to go, and not knowing whether you're even going to have the aircraft. United is in a really unique position because they didn't retire they didn't retire any, as a matter of fact, of their wide-body aircraft during the pandemic. So they are in a really great position to be able to shift capacity around their network and grow into some of these domestic leisure markets. That's part of why we have United rated and outperform. And the others retired their aircraft, and in part they were older, so it made sense to retire them, but they're having issues because the OEMs are behind on deliveries, are having issues getting aircraft to be able to grow going forward. So we think we'll probably talk a lot about that too.
Yeah, Helene, you mentioned the supply chain issues, the volatile jet fuel prices, difficulty hiring and retaining employees. A lot of this focus is going to be on how exactly these airlines are going to rein in costs at this time. What do you want to hear? What do you expect to hear over the coming weeks?
Yeah, so the first thing I'd love to hear from them is labor contracts. The big 4 airlines have open pilot contracts. American has an open flight attendant contract. I would love to hear them talk about they probably won't, because they don't like to talk about open labor contracts on earnings calls, but I would love it if they could give us some confidence that maybe by next summer, a lot of these contracts would be negotiated and ratified. That would be great, both from an investor perspective and from an employee perspective. I think it would be nice, and if the pilots, the flight attendants knew what they were going to be earning, and I think that would be good to get that resolved. We also, as you mentioned earlier, we need to attract people to the profession. I mean, we can't just do it overnight. We need to start with younger people. But yes, I'd love to hear that. I think we're going to hear a lot of discussion about their loyalty programs. The number one credit card that everybody has, that Americans mostly have anyway, is a cashback card. And then that's usually followed by a gas card. But if you live in a hub city, you probably have an airline card. And your spend is probably high, but it takes a while to earn a free ticket or an upgrade. So the airlines like having that dollar today, because it's not going to be redeemed for months yet. And it definitely helps. But if there's the shift in mix to more leisure-oriented travel from business and corporate travel, that's going to inform the way the airlines think about loyalty going forward. So I'd love to hear them talk a little bit about that. Demand for the holiday season. I'm starting to hear from people that fares are getting a little out of control, and so they're driving versus flying. I feel like everybody goes home for Christmas, but not everybody goes home for Thanksgiving. And in my investor calls lately, I've been hearing people echoing that and saying, we're driving this year for Thanksgiving, or we're doing Thanksgiving at our house this year, we're not going. We have to buy 4 tickets, 5 tickets, whatever. And we just, it's just gotten like really aggressive, especially given how far fares have come in the last, say, 18 months. Because, obviously in the worst part of the pandemic, the airlines were discounting. And in the last 6 or 9 months, they've been raising fares pretty aggressively, in part to cover higher costs, but and in part to discourage some demand. But yeah, flights are full. They're like 90%. Well, they're more. They're almost always going out with very few free available seats.
Well, certainly airlines and flyers as well having to be more strategic at the moment. A big thank you to Helane Becker for joining us this afternoon. Thank you.